the Fed were to be hiking rates, even if growth were to not quite pick up in Q3, do you think the RBI just refrains from any kind of rate action because of those factors?
Look, I think primarily the RBI has always made it clear that they're looking at the domestic growth inflation balance. And even in the last few policies, while the Fed has been cutting, it has been the domestic trends which have taken center stage as compared to what the Fed has been doing. And overall, I still maintain that the Fed is going to, in the entire cycle, end up cutting a lot more than what the RBI will have the space to do. We are only looking at 50 basis points in this rate cut cycle coming in from the MPC. Our baseline expectation at this point in time is that the two cuts will come in February and April. If we end up with a negative surprise on inflation, certainly that is something that could push the timing out to April and June, for instance. But I don't think we're going to be doing a one-to-one correlation with what the Fed is doing. The Fed has already cut and we haven't done anything. So if the domestic situation allows it, I think the rate action will come.
Katrina, do you feel like a CRR cut for now would be enough to help growth come back on track? The GDP shocker at this stage may not do much either.
Yeah, it's an interesting conundrum, I think. I think that the RBI is, trying to manage lots of different forces in the economy with, several different policy levers. So I think that the CIR reduction does certainly help, but it's not going to, reinvigorate growth to a 6% type level at this stage. But it is certainly going to help in terms of the liquidity and those, lower income households or, smaller businesses that are more struggling with, credit lines. I think they will get a little bit of relief, but it's certainly not going to be a game changer at this point. And I think the RBI is incredibly aware of that. They do have an inflationary problem, and sure, that inflationary problem might be driven by domestic supply side factors, particularly around food prices, especially vegetable prices. But they need to be cognizant that even though that might be the case, if they were to inject too much to, really lift domestic demand, then that would be problematic. And then, of course, that's going to then further push out the timing of when the RBI know that they're favoring inflation and really prioritizing that, then lifting domestic demand too aggressively through these CIR cuts isn't going to help the timing of cuts, and it's certainly not going to bring them forward. It's only going to push them out further.